TXMC, thank you so much for doing this, man. I appreciate it.
Happy to be here, Rob. Let's do it.
So TXMC is a analyst for Glassnode, which studies on-chain analytics for Bitcoin. On-chain is a very unique situation with Bitcoin where you can actually check the UTXOs, check the wallets out there, and see the amounts that are moving on and off chain. Really interesting data that we didn't get before with equities. And TXMC works for probably the largest company that studies this information, which is Glassnode. He is the analyst for them. TXMC also has a great YouTube channel called AlphaBeta Soup, where he goes over things in very good detail, where you can see the charting and all of that stuff and just see how well informed this individual is. And we're just so lucky to have TXMC on. But before we get started, I just have to ask you, what the hell is going on with Bitcoin? What the hell is going on, man? I mean, what is this? 50,000? I mean, we're 68,000. Now we're at 50,000. What the hell is going on, TXMC? Can you make some sense of this?
We can make sense of it. We can make sense of it because of the amount of transparency and the amount of data we have to make these assessments. And what we just experienced over the last few days was predominantly driven by the derivatives market, by futures specifically. They were really just levered to the ears over the last few weeks. The amount of open interest, the amount of open contracts there has been building and was pretty much at all-time highs, which we had in April. And it's been staying at that level for a while. And, we've been seeing some legacy market weakness. And last week, US markets just really had a tough few days. What I think really happened, my general feel and assessment, and other analysts that I talk to tend to agree, is, we came into the end of last week with the weakness I spoke about. We get a few margin calls, a couple of hedge fund guys look to go risk off, sell some assets, pay the margin call, and Bitcoin gets sold. And we're hanging out right at a key support level, which has a lot of confluence. The 53,000 price level that we were at the end of last week was a very important place. Technically, it was an important psychological level. And there were a lot of on-chain things that also pointed to that being an important place. It was also kind of the top in September. If you remember the day that El Salvador made Bitcoin legal tender, we had a big crash that day too, and that price was 53,000. So there were a lot of factors kind of making that area really important. And so what I think happened was we got a little bit of bearishness at the end of the week. The torqued up, highly leveraged derivatives market and all those things came to a head, and we got a liquidation cascade. A bunch of people had their stops right under that level, and when it started to get tested, one guy gets knocked over, his liquidation hits another guy's stop loss, and it just creates a chain reaction. And we saw over $5 billion worth of value squeezed out of the futures market in a couple of hours. It was incredible.
It's quite intense when I look over here on the right at the chart and seeing it pull all the way down to it bottoming out around 42,000 on that one candle. When you look at it on like a trading view or on, like a Coinbase Pro or something like that, you can see the actual, the candles. And that was just a gnarly liquidation, went all the way down to 42K and then just a ridiculously fast bounce right back up, which is it was just insane to be looking at that. That was what day was this? This is on the 4th of December around 5 o'clock. Just a total just panic drop all the way down to 42K. What causes something like that? And is it real in a way? Because some people wonder, is like when you see like a random just flash crash and then it quickly rebounding up, is that just some sort of corruption going on? Like what is that? Because it almost doesn't make any sense at all to see that candle there.
Well, it is real. So there are definitely people in those candles there getting smashed, just getting utterly obliterated. People who are trading futures on leverage. They have a very small amount of collateral that gets leveraged 10x or 20x, so they can take much larger positions. But it also makes them very susceptible to the market going against them. They have a very tight range of acceptable risk when you get levered up too high. And so when you get those cascades, a bunch of people in futures are getting liquidated, and the collateral that they have gets tied to the spot market. If they are using Bitcoin as the collateral for their futures position, when they get closed out, if they're long, if they're betting on price to go up, and and they get closed out, that becomes a sell order. And so that's how you get those cascades. And that part is real. But the spot market where people actually buy and sell physical Bitcoin is like a separate beast, and the way that I just described it can be affected by some of these people's collateral turning into to sell orders. But by and large, the people who hold Bitcoin, the long-term holders and all the different like categories of user that we can look at on chain, which have the vast majority of the supply, those people didn't really seem to react to the events of last weekend. So we had this dramatic event, but all that we really saw outside of the people in futures, the leverage traders in futures who were clearly affected, outside of that market, the only real behavior that we saw were people accumulating Bitcoin, which, is basically buying the dip. And in a way, that's what creates the long wick at the bottom of the December 4 candle, because the liquidation pushed it down. And at one point, it was a full-bodied candle, which is probably terrifying looking. But over the course of the closure of the candle, people stepped in and bought because they realized that this is kind of an anomalous event, and 42,000 is probably not a fair valuation for Bitcoin when it was just at 53. It seems a little unreasonable. So I think that's what you saw.
It's just completely wild, and it goes to show it's like it's hard to lay out the proper thesis on how to get into Bitcoin, because I hate I just did a whole video on stagflation and why I think we're in a stagflation environment right now, and that could lead to a lot of opportunities in the near term if you have some powder dry, if you have some dollars ready to go to throw at something. Now, I don't like having dollars. I think of it as hot potato money, but in times like this, it makes me realize, and I talked to you about this in the last Twitter space we did, where it was like, I forget what the price was at the time, but I'm like, I'm putting together a 20-30% cash position right now to throw at stuff, and then I started buying that dip when it went down. I didn't get the bottom, unfortunately. I got in at like 52, got in some more at 48, but I didn't get the entire dip. It was so hard to time that, but it's such a hard thing to time with Bitcoin, and it's just this kind of, it's almost like an insurance policy for somebody that's watching this video, that's in precious metals, for example, that is just dabbling into Bitcoin, just getting started with Bitcoin. It's hard to time this thing. Do you from the analytical information that you get from on-chain, like what does it tell you, and what would you say to the individual that is like, I haven't gotten into Bitcoin yet, or say that person just has maybe a 5-10% position in Bitcoin, possibly wants to get more? What would you say to that individual? And like when it comes to, well, when should I buy? Is right now the time, to buy? And this is not financial advice. This is just completely opinions between friends here. Not financial advice. I have to say that disclaimer. But what would you say to that person?
Well, again, I'm definitely not a financial advisor either. I'm just, a guy who likes Bitcoin and data, right? But I I think that there's two approaches for people who are looking to accumulate a position. I'm certainly not someone who would try to get, I don't try to tell people what to do with their money, but I wouldn't give advice to a trader. Their bias is different from mine. I have a long-term outlook on Bitcoin. So my bias might be a little different than others. And I think that there's two approaches. I would like to not think about the price and just know that I'm steadily accumulating something that I believe in long term, that I have a thesis on. And so that's the dollar cost average approach. And that's where you decide how much money you're willing to, you know, rid yourself of on a weekly, monthly basis towards this investment, in a way that's not going to negatively affect your quality of life or your mental health, right? Because there's a risk level for everyone. And I think that there's people who might decide that path. And in that case, the time to buy is now and next week and the week after that, right? It's forever. That's the thesis, and that's the strategy. And then there's the other folks who maybe don't mind watching the price chart a little bit, and maybe their inclination is to make larger buys, more targeted buys, but in the end they're still kind of more spaced out accumulating. It's not so much of a dollar cost average. And for folks like that, I think that's what I tend to do. I have a smaller account I do some DCAing on, but what I really like to do is wait for moments like what we just saw and buy a chunk. It's easier to track that way. There's less dust in my account to track, and also I don't know. There's a fun interactiveness to it because I spend so much time watching the markets. I enjoy those things. But I think that there's so much data that we get from on chain. We can see the way that hodlers are behaving, people who hold Bitcoin long term. And I think that when we see moments where they might be distributing a lot, that can be a signal, hey, maybe this is a time where we might see some lows and this might be a good opportunity to buy. And I think when you see leveraged liquidation events like we just saw the other day, we can see those things. That's not on chain, but it's the same, arena of data that we look at for Bitcoin, the same market data. And I think events like that are also great opportunities for people to look for as, local bottoms, I guess is a way to put it. But generally, I think the safest strategy for people, because I don't consider myself a technical analysis expert or someone who is a chartist. I have some basic understanding of support and resistance, but that's not my focus. So I tend to advise my friends and family to DCA and not to think about it too much. Just kind of treat it as a savings account, because that's what I think is the most successful approach for the most amount of people.
Yeah. Yeah, man, and that's actually something I really appreciate about you and your work, because you're looking at it from more of a macro view instead of saying, look, I'm an elite chartist and we had a golden cross here and this is going to happen there. You're looking at it with more of a realistic approach, and that's what I noticed from your channel. And everybody watching this, if you haven't been to after this watching this video, I'll put in the description down there to check out his YouTube channel, AlphaBeta Soup, which I think is really well done. A lot of work you put into these videos, and it's very, very impressive. So I highly recommend to check out his channel and subscribe to his channel. You'll see when you go over there what I'm talking about. But for somebody that is oblivious to on-chain analytics, like hasn't heard of Glassnode, how would you describe on-chain, and like when was that like that revolutionary moment in your mind where you're like, whoa, this is data that you can't get on an equity. This is data you can't get anywhere else. Like you can't get the on-chain analytic data with Apple stock. You can't. There's no on-chain for that. So it's like, could you describe that to the individual that might not have ever heard of it?
Sure. So one of the things about Bitcoin that makes it really powerful and compelling is its transparency and its immutability, right? It has a ledger of all transactions, of all value transfer that has ever taken place on the network. There's an open ledger of that activity going all the way back to January 2009. And what's really amazing, what it lets us see that we cannot see on a traditional asset, is the behavior of the holders themselves. We can follow an individual coin from its minting, its reward to a particular miner, and all the way through its divisions and ownerships throughout its lifespan, all the way down to where it is right now. And that kind of data gives us a lot of insights into the behavior and the evolution of Bitcoin long term. And we can see the human market behavior and the aggregate group dynamics, the psychological behavior of the market participants in a way that has never been able to be seen in traditional equities or commodities or anything like that. There have been books written for decades about the psychology of investors, how they behave in a bull market, what they do in a bear market, how they react to negative price. And until we had Bitcoin, and now the visibility given to us by these companies like the one I work for that are shaping the ledger data into something consumable, the amount of detail we're now getting is showing us these dynamics in at scale for the first time, with all of the thousands and millions of holders of Bitcoin over now 12, 13 years. And it's really incredible to see. And it lets us study the ledger and have an intimate relationship with the asset we're invested in a way that we've never seen before. And we can see the miners, how much hash power they're contributing. We can actually witness network security and how much security spend is being paid to these miners to uphold the network's integrity. You can see all that stuff in real time. Profit taking, how long people have been holding their coins, whether they spend or hold and accumulate more in weakness. Like all of these behaviors are now visible to us. And we're just getting started at peeling back the layers and seeing how we can really understand it. It's only a couple of years in.
It's so fascinating. What's amazing is guys like you are actually at the forefront of it. Rather than studying something that, if you old principles about the stock market or something, this is just like you said, this is only a few years in that we're actually going deep diving into this. So it's like this new emerging thing that's just this total wild card that even people that are in equities, hedge fund guys that have been there for dozens and dozens of years are like, hey, TXMC, can you teach me about this? Because you're at the forefront of it. It's a completely new thing. And so it's so cool to see guys like you, Willie Woo, Will Clemente, Dylan LeClaire. You see these guys coming out there and Dan as well. It's incredible. We're doing these weekly spaces on Twitter where we talk about this in real time on Fridays between myself, Dan, and Venture. And you come on all the time. I'd love for you to be on there every time. It's up to you. But it's been incredible to learn more and more about this. And I highly recommend people to study this information of on-chain analytics because look, you can't take the thing that blew my mind about Bitcoin the first time I got really orange pilled was when I took Bitcoin off chain from an exchange. It was on Cash App, and I sent it from Cash App to a cold storage device. And when I did that, I got a soft confirmation on right away on this cold storage device where I'm like, wait, I get to see that it's already immediately. I can see that it's on the way. Oh, whoa, that's crazy. But what I did there is that went on the ledger, which is then the information that TXMC studies there, is that he saw me move it from the exchange onto cold storage. And then he can see from cold storage if I move it back to the exchange. You can see this information because it's an open ledger of information. Now it's anonymous once it's in that, when it's ledger to ledger, it's still anonymous, but you get to see that actual information. How much did this whale let go of their Bitcoin? This specific wallet that holds this much Bitcoin just moved this much from here into the exchanges. You don't get to see this information with a stockholder. You don't know, you can't follow and track a specific stockholder's account like this. It's completely it's just wild that this information is even available right now.
I agree. It is wild. And it's also really exciting. The thing that drew me to it the most was the being able to visualize human psychology. I just find that kind of thing fascinating. And, I spent a couple of years before I started studying Bitcoin. I spent a couple of years trying to make it as a day trader in US equities. And I had some kind of mixed success, but I learned a lot throughout that. And I was always fascinated watching the tape and the level 2 and just seeing when volume comes in and how people can play the order books. And I was always just kind of fascinated with the little playground of different forces that go on, in a market. And Bitcoin is maybe the last true free market that we have, where it is a pure supply and demand asset that is inelastic to demand, with the supply being completely capped. And so you get to see these true raw human behavioral forces at scale interplaying with each other over time. It really, what we're seeing, in my opinion, is history written of the future of money. If Bitcoin grows to become to the level of being a reserved currency, which some people think it may do, then what we're looking at right now is what our relationship will be with that currency. We can audit a future reserve currency in real time from a Raspberry Pi at our house. It's incredible.
It's just so wild. That to me is like, as a unit of account, there is no comparison because you can't to audit any other asset. I consider it like I want it to be a reserve asset because if it's a reserve asset, it kind of is. It's like a Trojan horse that slides under the radar. When you say currency, when people I always laugh when they say like, oh, Dogecoin will be the people's currency. It's like they don't. If you're going to be a currency, now that's where they step in and they have a problem. They're not just gonna be like, oh yeah, you want to be a dollar? Oh, you want to replace the dollar? Oh yeah, well, so you're gonna go to jail, right? That's what you're gonna do. And it's like, so like they're not okay with currency. But if you, and this is when Jay Powell said it, in about a few months ago, was like, yeah, it's just a digital gold. It's just an asset. It's a digital gold. And I'm like, perfect, Powell. Thank you for saying that. It's just a digital gold. There's no such thing as Lightning Network. Don't worry about it. It's no big deal. It's nothing.
It's all good, Jay Powell. Don't worry.
Yeah, and then when you bring up a node, what a node does, like once you sync a node, it I didn't understand the blockchain. I thought I did. I didn't understand the blockchain until I synced a node. When I synced a node and I saw it taking a week to sync this node, and it took over 700,000 blocks to get this node synced up and almost 500 gigs of memory to sync this thing together, you realize, wait, I just put the entire Bitcoin, every transaction, every UTXO that moved in and out, I just synced that onto this little device here, and I have the network here, right here. I prove that the blockchain exists. I have it right here. And then everybody is doing that over and over and over and over again. So you get this intense amount of security because so many people have downloaded the entire network and have it on these little devices. That's incredible that you can build these nodes. And so I had no idea until I used cold storage and I built my own node. Then I got completely orange pilled. And it's funny how many people talk about Bitcoin. You'll see them on CNBC, you'll see them on some interview or whatever. And none of these individuals have used a cold storage device. None of them. Peter Schiff has never built a node. He's never used a cold storage device. And it's like, wait, why are you even capable of talking about this? How can you criticize something that you don't even understand? Because I didn't understand. I accepted it prior to building my own node. But it's like, if I didn't understand it until I built my own node, how can we expect these individuals to understand it?
We can't, and I think it's also heavily dependent on incentives. Incentives drive all behavior, frankly. And many of these people are so embedded in a legacy system that they have no incentive to consider a possible future where it isn't relevant, or where it is weakened, or or where there is a new competitor in the room. They can't even conceive of a future like that because their quality and way of life is so heavily dependent and benefiting from the status quo. That's my perspective on it, at least.
100%. I couldn't agree more. I want to ask you, I know you're extremely bullish on Bitcoin. Bitcoin could be 100,000 right now, and you'd be extremely bullish on Bitcoin. And like I know, because I'm the same way, where I've bought Bitcoin in the 60,000s, I've bought Bitcoin in the 50,000s, I've bought Bitcoins in the 10,000, even before 10,000. And I just keep DCAing myself and adding as I go along here. But I also keep my fiat engines going. I make sure I'm building businesses. I make sure that I keep building stuff. And so I make sure that this money engine keeps going so I can continue to take profits, put it into silver, put it into Bitcoin, put it into the things that I believe in, and then I can continuously add more and more rather than sell or dump my entire stack or have, this certain amount waiting and I can only put so much in. I want to consistently be buying. But I wanted to ask you this from, friend to friend, and people watching this I'm sure want to know, what's like your top 3 reasons why you're extremely bullish on Bitcoin, specifically at these levels here? If you could lay out, maybe even if it's just the top 1 reason, but maybe the top 3 reasons why you're so bullish on Bitcoin.
My bullishness comes from the perspective I said I have. I describe my time preference as being subterranean. Because I've struggled my entire life to have a plan to build wealth, an idea of how I can provide for myself. I haven't even had any kind of career prospects really until recently. And so one thing that I've been really concerned about in the last few years is how to set my family up, and my son, who's very young, now that I'm a dad, how to set my family up in a way where I can know that their security is protected into the future from threat of force, from currency debasement, you name it. And in this world that we're living in now, with what we've seen happening since March of 2020, I think that we are in a time now where we can no longer consider the old methods of protecting oneself financially to necessarily be the best practices. I think that the old 60-40 portfolio is probably dead. And running into bonds, that's not a play anymore. And I think with what we're seeing with the dollar, and we're seeing other nations finding ways to not have to use dollars because of the runaway debt and the way that their own purchasing power in the global markets is being affected by what's going on with the Fed. When I see all these things happening, Bitcoin feels like the only sane play to me personally, along with maybe some precious metals, which I know a little bit less about. But but I can speak about Bitcoin, and I think that its incorruptibility, the fact that it has a fixed supply that I could write on a calendar, I could write it on a piece of paper here and not look at it for 50 years. And I could come back and the supply would be the number that I wrote down, within a couple hundred Bitcoin. The fact that I can rely on proof of work issuance and the difficulty adjustment, and the fact that nothing can be changed without the consensus of the nodes and the miners. Just the reliability of those factors in the face of all of that uncertainty I was just describing, that makes me bullish. And when you think about the adoption curve of Bitcoin and its potential as a hard money asset, and the total addressable market potential of Bitcoin, we've barely even scratched the surface. I mean, this is a single shaved coconut flake on top of the German chocolate pie, like we've barely even started to see the actual potential of this thing as it grows. It feels like it's been around a long time. For 12 years, it's 5-digit price. We've been through so much, but I think that there is a bit of a bias in there, that if we were to step back and consider its age in the grand scale of the technological innovations of humankind in the last 100 years and the history of previous currencies and monies and assets, it's very young. And just thinking of its price in a day-to-day, week-to-week sense, to me personally, is almost irrelevant, because I don't care what the price is going to be next month. People ask me, and I'll give them my opinions, but they don't in any way affect my thesis or my approach to Bitcoin, because it's, as I mentioned earlier, it's a savings mechanism. It's a black box. Things only go in to my Bitcoin holdings. Because it's something in the future you can collateralize. It's just like owning a home. And that's the way that I think that when people start to think of it that way, to know that they can rely on it the way they can rely on a building to stand there for 50 years. That kind of trust is exceedingly hard to find. It's not even trust. It's just a reality. It's just what it is. It's truth.
I love that. Yeah, man. It's a scary time to be alive, because there's only so many options out there on how to preserve your wealth. And when you're working a job, and I talked about this with Jay. Jay Gold was on, and he brought this up about, if you're part of the working class right now, people tend to forget that it's not about saving in dollars. You're giving up your time. When you're working a fiat job and you're working 60 hours a week, that's 240 hours a month that you're giving up for that $4,000, $5,000 or whatever it is that's coming in. You're saying, if you say you make $4,000 a month, you're saying, here's my 240 hours of my life, my existence on this planet. Here's my time. 240. I look at it like it's poker chips, almost like 240 poker chips of my time value. Here you go. Each one of them is worth an hour here, and I'm going to take 5,000 of those dollars for my poker chips of my time. And by the way, I only have so many of them. There's only X amount of hours of my time on this planet. I'm giving you this small amount. Here you go. I'm giving you more and more and more. And before you know it, you get to these figures of, 10,000 hours of someone's time. And then you realize, well, you can learn and be a professional at a new skill with 10,000 hours in that skill, which is crazy that we're giving up this time for something that's melting away and then is being inflated. So we're getting the same, that person that's getting that 4,000, getting the same 4,000, but they're getting paid in a diluted currency that's been inflated away. So and now the CPI data is coming out very soon, which I would imagine it's going to be higher than 6.2%. I think it's probably going to be coming around 8 or something like that. And then even then, it's still not giving us the full tale of the take. We're not really understanding what's going on here. So to me, when I look at it as time, it's just scary. And so I couldn't agree more that there's only so many things that we can do right now to preserve our time. And do you tend to have this anxiety type thing going on? Because I have anxiety in a way where it's like, I've put myself in a good position. I keep building stuff. I'm pretty stoked on what I'm able to be building every day. I love what I do, but at the same time, I have this anxiety, like, how much time do I have to get into these positions that I want to get into? Do I have enough? And even when you have enough, you want to know if you have more? Do I need more Bitcoin? Do I need more silver? Do I need more platinum? Is platinum too cheap? Yeah, platinum's way too cheap. Well, should I get more platinum? What are they using this on? Okay, well then I want to get into that. All these different things. And do you tend to have anxiety with your positions right now, like to try to get more in this? Wow, we're down at these levels here at 50,000.
A little bit, yeah, I do. I don't. I haven't identified it as anxiety specifically, but it is in a way that it's like there's like a little bubbling urgency there, and it's um, one of the guys on Twitter, Mind Over Matter.
I love that
He
guy.
says, I love Mind. He's great. He said something in a space a while back, and I've it's stuck with me now for a couple of months. And he says he views everything now as a time opportunity cost in terms of Bitcoin. Like everything is an opportunity cost in Bitcoin terms, including the time that he spends on things and the money he spends on things. Now, if it's not being spent towards accumulating the things he believes are the safest plays for him long term, then then there's an opportunity cost there. There's a risk cost, and I've started to feel that way too. Whenever everything that I do now, I feel in some way is if it's not contributing towards growing my fiat stack to then accumulate more Bitcoin, or I have a small position with some metals, but predominantly my investment position now is Bitcoin and a few mining stocks that I still have in my old TD account. But if everything that I do on a day-to-day basis, I feel like in some way has to be contributing towards the growth of that plan in some way, securing the future. And I think that it comes from that urgency and that almost anxiety, we could call it, of I don't know how much time I have, not just the price being low here at this moment, but in a way, I feel like on a macro level, there's like a little bit of a clock ticking. That we're some kind of pressure release moment. I feel like has to happen in like my lifetime. This kind of money printing has to have a large consequence at some point, and I don't know what that looks like or when that is. I'm not wise enough to see all the pieces moving, but I just feel like what I can do between now and that moment is try to accumulate, in my opinion, accumulate as much Bitcoin as humanly possible. And so everything I do, I feel like I'm building towards that. And if I'm not, it's almost like, what am I doing? I feel like I'm wasting my time.
It's true. I mean, and it's sick because these banks here, we give these banks these 0% loans, and they're giving us these cheap rates to get houses, but people forget that's for the rich. Like even myself, like I go to try to get a business loan from them. They're like, if I was 18 years old trying to go to some random college somewhere, they're like, here's $250,000, Rob, no problem. It's like, here's a couple million in revenue, millions in revenue. Here you go. Nope, no loan for you. It's like, what the world? Oh, and you got to be 2 years old with your LLC. You got to do this. You got to do that. You got to make. It's like they have to make you jump through all these hurdles to get this. So people don't realize that even though the rates are cheap to get a house or something, the prices of these houses are super expensive. The prices of commercial real estate super expensive, and then it's only the rich who get to enjoy this right now. And so if you're part of the working class, like how do you save your ice cube? If the dollar's your ice cube, and then you go to the bank, they're so pompous right now at the banks. They give you 0 point whatever percent on your money. They don't give you any interest on your money. And then what are you going to do? Go buy bonds? It's like, oh yeah, that's going to really save your ice cube there. Lock it up in a bond. That's a great idea, And so it's like the options are so limited that Bitcoin really there really doesn't seem to be other options besides precious metals and Bitcoin. There really isn't anything else when
Yeah,
it comes to
unless
like
you're willing
what's
to.
money. Like that's money, not like a house or something like that. What do you consider to be an asset of money?
What do I consider to be an
No,
asset
no,
of
like
money?
oh no, I was saying like the options of what's an asset of money are really just precious metals and Bitcoin. It seems.
Oh yeah, yeah, it does feel that way. Those are the only, because the one of the primary functions you're looking for, not just the medium of exchange, but is the store of value factor. You don't want your buying power to be destroyed over time. That it needs to have integrity over time, and it feels like our choices for any kind of real yield, because of the inflation that you're talking about, it feels like our choices there are slimmer and slimmer, unless you are inclined and willing to allow yourself to get pushed out on the risk curve and start taking these extremely risky, which I would never advise, YOLO plays on all these altcoins, and who knows how those are going to work. If that, you want to talk about a casino, and you see so much activity happening there, and so much burst of activity in U.S. equities with these new accounts at TD Ameritrade and Schwab the last couple of years, just this explosion of people trying to trade, because folks are just looking for literally anything that will give them a yield, and they don't know where it is. And with price discovery in most traditional markets being completely warped of all signal, it's the quality of choices is far reduced. And it, to me, Bitcoin and gold and silver feel like just about the only sane options for like the average person.
Yeah. And when you're looking at, like, as somebody that studies the hash rate, who studies, miners, who studies, the on-chain analytics between big whale wallets and everything, are you seeing anything in specific right now that's catching your eye with Bitcoin? And then and then the next question I wanted to ask you is why you're only Bitcoin. So I guess they kind of go hand in hand. Is like, do you see anything specifically right now that makes you want to buy right now, that makes you want to sell right now? Any type of whale wallet situations? I guess I'll follow up with that next question.
What I'm seeing with Bitcoin right now that I think is really interesting, and I think we've talked about a little bit of this in the spaces, is what's going on with the miners and kind of how they've been changing a little bit over the last couple of years. And they for many years they used to be a really consistent source of sell pressure on the network, but in the last couple of years, especially in the last calendar year, with publicly accessible funds becoming so readily available, and now with China banning industrial mining and many of these big operations moving to North America where they can access easy capital, we're seeing miners holding a lot more of their coins. And in a way, it's kind of helping to shape this evolution with Bitcoin to where it's becoming more of a store of value, and it's becoming in some ways less speculative for portions of the holders. It's still a very speculative class, but there's a lot of people who have it who are now in the last year or so starting to exhibit behaviors that seem like they have a lower time preference, like they have more patience, and like they're starting to understand that their options, their speculative options, and the quality of those choices maybe aren't what they were before. Maybe the signal is not as clear. And so we're seeing a lot more accumulation and stacking happening by the various people who have Bitcoin. And it's starting to build my confidence generally that what we think about it, what people that we talk to think about Bitcoin, not that I doubted it, but it seems that other people are starting to believe those things too, that it is a long-term play, that it is a place to store your wealth, because that's the behavior we're seeing. And I hope I've answered your question, but that's just something that gets me really excited, because if the miners themselves are seeing this as a long-term investment, like they're one of the parties that is most incentivized to sell coin. And if they're not doing it, then there's definitely something evolving under the surface.
It's really a fascinating point about the miners. And when TX is talking about this, he's saying it with conviction, because you're actually monitoring these miners, like in a literal way, monitoring the wallets, monitoring what they're doing, accumulating and not selling their Bitcoin. And not only are they accumulating, you could look at like Marathon, who did a 500 million, offering to go buy more Bitcoin for their balance sheet. So they're literally leveraging themselves. A miner is leveraging itself to accumulate more Bitcoin on top of being an actual miner of Bitcoin. Like that's such a brain fart to think about. It's like, wait, whoa, what? Like, the miners that's mining Bitcoin, who's already mining for it, when it's like if a gold miner was so bullish on gold that it mines gold every day, but it was like, you know what? I also want to buy 500 million worth of gold in addition to the millions of gold that we're mining every single day. It's like, just to put in your shelf, just put in your vaults. On top of it, you're a gold miner and you put gold in the vault. Like that's an unheard of thing for gold miners. They don't do that. They mine gold and they sell it to the market. You look at like Barrick Gold, or you look at these big gold companies, they mine it and they dump it. And anybody in precious metals, we can't deny that. It's just the truth. They don't keep gold on the balance sheet, but Bitcoin miners do. Is there anything, like when you're looking at the on-chain stuff, when you're monitoring it and hash rates and stuff like that, is there anything like specific that you can comment on with that accumulation from miners right now?
What do you mean? What
Like
can I specifically answer?
is there anything that you're like, are you able to specifically monitor specific miners or know collectively which wallets in a way, like you don't know exactly which name is what, but like in a broad
Mm.
sense from the actual analytical information rather than we just talk about it in a way. Cause well, that's public information that Marathon did that $500 million offering to buy. And so that's proof right there. But any more
Right.
like actual proof that we could talk about with that?
Right. So, one of the ways that I get the conviction to say that their behavior is changing is because we actually monitor their collective balance in their wallets on chain. We can see all of the coin that they hold. And, the Glassnode data that I have doesn't break out each of the miners individually. That's kind of some of the public information we rely on. When you see Bitfarms or Hut 8 tweeting that, hey, we just mined 4,000 coins this year and we hodled 99% of them, or whatever it was they tweeted the other day. That's public information. But what I can see is the trend of coins that move in and out of the miners' wallets as a whole. And so each day they do sell a percentage of the mined coins. And there are some miners that are part of a pool of a bunch of individuals all over the world who contribute their hash power to a pool and they split the rewards. And they're not a business that is set up to take in capital and the way that Marathon is, right? So those pools, they sell coins, they just sell them. As soon as they mine them, they sell them. And so that kind of pressure is always existing. But these other miners, these ones that are full-fledged businesses that have long-term time horizons, they're putting more and more of the coins they mine into that treasury. And so we're starting to see what we watched for years was the early miners, they had a huge stack of coins because the block reward was so high in the early days. And so, the miner balance as a group was very high in the first few years of Bitcoin's life. And what we saw over the first several years was that pool of coins was perpetually being sold by the miners as a group. It was just losing stack. And then that an evolution happened in late 2019, around July, August, September, when some of these newer gen miners really started hitting the shelves and coming online. And there started to be a shift. And now what we can see is that the balance in miner treasuries, which represents, how much they're selling versus what they would normally, or I'm sorry, how much they're holding versus what they would normally sell. That balance has actually flattened out and in some cases grows and then kind of stays flat and grows. And so what that's showing is that there's less and less of an incentive for them to sell their coins. They're seeing it more as an opportunity to add to the treasury, which is a completely different behavior than what we had for the first many years of Bitcoin's life. And if that trend continues to reverse, there could be a period, a year from now, where we're actually seeing their treasuries grow more steadily. That's a trend I anticipate is likely to come if these factors hold. And it's something that's really fascinating to see. And as you said, it's verifiable. It's not conjecture. We can witness it, the hard numbers in data.
It's totally fascinating. It's totally fascinating to think about that. And that's just, to me, that is just such a bullish thing. If the people mining the Bitcoin are actually accumulating the Bitcoin, it's just totally wild. So in addition to the miners, could we talk a bit about hash rate and stuff? So when you see the numbers going down like this, I believe the hash rate is still peaking towards all-time highs, right? Could you break down what a hash rate is for somebody that might not know what a hash rate is and why it's such an important statistic?
Sure, I can do my best to, and just for the audience to know, I'm very much a student of Bitcoin, and so a lot of these things that I've learned off of the backs of great minds before me because I ask a lot of questions, and so if there's something I don't know, I'll be clear about that, and if I get something wrong, I'd love to hear about it. But my understanding of the hash rate specifically is just, in layman's terms, it's the total computing power of all the miners. It's the amount of computing power that is being contributed towards solving the next block in the issuance schedule. And the miners themselves represent the total security of the network. And the higher the hash rate, the more resilient Bitcoin is to an outside attack. Because the only way to attack the ledger and the consensus mechanism that governs Bitcoin is to overpower it with hash power, to create enough machine power that you can influence the consensus of the network into believing your truth. And so the higher the hash rate grows over time, the more resilient Bitcoin becomes to attack. And in a way, the total hash power of world computing, it's a almost a zero sum game. You know, there's only there's a certain amount of issuance of computing power each year that can come out of the plants in Taiwan and whatnot that produce the chips. You know, and the greater Bitcoin's hash power grows, and the more future development gets contributed to the network and not to other ventures, the harder and harder it becomes for a bad faith actor to acquire enough computing power to then attack the network, because there's only so many other computers in the world to then combine. And Bitcoin's already like the strongest network like on the planet freaking Earth. And so when you see the hash rate get knocked in half when China bans industrial mining, and then in just a matter of a few months, it's already right back up to all-time highs, and no one who owns a single Satoshi was affected in any way because of the network's resilience, it can do nothing but build intense confidence, in my opinion.
That's a sign of somebody that is truly worth going to their channel and subscribing, is when you say, like, I'm a student still. Even though I know as much as I know, I'm still a student. I'm still learning from other great minds. That's a sign of a great mind, bro. You know, so it's like it's humbling to hear somebody say that, because that also tells me that the information you're saying comes from the heart. It doesn't come from just saying, like, I'm just regurgitating information and it's, well, no, it's like you specifically admit, it's like we're all students here. I'm a student. I'm learning new stuff every single day. I've only been in Bitcoin, you know, a little bit over a year and a half or something like that, around 2 years.
Longer than me.
Yeah, it's crazy how it just grabs you. You know, especially with what you're doing with Glassnode and stuff. It's like, how did Bitcoin grab you, and then like, why only Bitcoin for you? Because you're a Bitcoiner. You're not in Ethereum. You're not in altcoins. You see them as a casino in a way. What grabbed you in, and then made you a Bitcoiner, and only specifically you buy Bitcoin? This is not BSV. This is not Bitcoin Cash. Just Bitcoin, right. BTC.
What grabbed me? Well, you know, I've been on kind of a personal journey the last few years. So 3 years ago, my mother passed away from cancer. It was really sudden, and it was really just kind of a nightmare illness. She had a very terrible case of kidney cancer. And
sorry to hear that, brother.
It's all right. But I was very close to her. And then after she passed, I kind of took a long look at myself and how I was taking care of myself. My mother didn't have very good health to begin with. How I was taking care of myself, how I was planning for my future. And I don't know, just kind of a light went on in my brain, and I started to take things more seriously. I was a bartender for like 10 years. Bartender, waited tables.
I know that life well.
Yeah. Yeah. I barely graduated high school. I dropped out of college after like a semester because I didn't have any idea what I wanted to do. All I cared about was partying and just having a good time. Right. And after I had a kid, and then the thing happened with my mother, I was just like, you know what, man, you need to stop messing around. And so I started reading. I started trying to take better care of my body. I started working out, and I started trying to learn more about the markets. I thought, you know, maybe I can generate an income for myself. And so I tried day trading. I spent a few years learning. I've spent about 2.5 years really focusing on that heavily. And I had some kind of mixed success, but I really learned a lot about the markets. And I became really fascinated by just a way that people interplay with each other in markets themselves. And so during that learning, and then seeing everything that we went through in 2020, all of the kind of economic unrest, I think everyone really started learning a lot more about money last year. At least a lot of people did. Start kind of your relationship with it starts to change when you can literally seeing it melting out of your hands, like you said. And I think it was when I read the Bitcoin Standard that I really started to understand it. And I think it's a moment for a lot of people. And I just kind of bought it randomly, and I was like, you know, I'm going to start reading this. And I'd already been dabbling in Bitcoin and like trying to understand it. And I grasped that there was a fixed supply, but I still didn't really understand how the proof of work system operated. And I didn't really get why Bitcoin was important from a monetary perspective. And so that was what Saifedean Amos, who wrote Bitcoin Standard, helped me to understand, was what characteristics of money are important, what Bitcoin has of those characteristics and what fiat does not. And one of those things is debasement, right? Is the trust in the supply not being diluted by human actors who control the supply. And that's one of the problems we have now, right? And so that really just started to take me down the rabbit hole. And then, I didn't even know what on-chain analytics was, frankly, until earlier this year. And I was just messing around and I found that stupid stock to flow model from Plan B, which I don't pay much attention to, but it was the first time that I started to realize that there's data in the ledger itself. Like the ledger being transparent and existing on all of these nodes around the world means that there's 12 years of data here, and we can do a lot of cool shit with it. And so that just really sucked me in. And as someone who's kind of I enjoy making spreadsheets, and my fiat job, I produce charts and visualizations for people who don't normally think about data. That's a job I've had for the last few years. And so those things just all kind of merged together, and I started making on-chain analytics and on-chain charts, and I don't know, it's just completely consumed my brain. And like you said, it just grabs you. And now I don't know, I wake up every day and the first thing I want to do is just go see what new things are happening with Bitcoin, because I don't know, it's the level of transparency and the level of depth that we can have in understanding it, just it feels like a well that I could never really get to the bottom of.
I really resonate with what you're saying, and I appreciate you sharing that you were a bartender and a waiter, because I just made a video talking about this, like literally the last video I did, talking about like my failures and my flaws, quote unquote, and it's like it makes you a better person. I think because you were in the service industry, and it gives you the ability. I think that's why you're so social. I think that's why you have such a good voice in the space. And so when you look back on it, it's like we can look at ourselves and go, yeah, I was a waiter for 4 years, 3 years. I was a waiter for 10 years. I was a bartender. I was this. But really, if you look at the skills it gave you, it gave you people skills. Making those first impressions are so key. Those first 10 seconds as a bartender, it's everything. It's like that. So you're constantly hundreds of first impressions, day in, day out, day in, day out. It's like, don't discount that. If somebody's out there struggling, listening to this, bartending and waiting it's a cool occupation. You can learn a lot there, and it's a really good job. I would argue it's a better job than most college jobs, being a bartender and a waiter. You get those communication skills and you get those tips too. So it's big.
I think everyone should have some experience in some capacity of the service industry at some point during their working life, just to kind of know what that experience is like, and also that we interact with folks in those industries every day, especially in the West. And so I think that it's important to understand their experience in a way.
100%. Yeah, and I noticed, like, I brought this up, and I tweeted about this, a little bit ago too, and it's like, when I'm at a grocery store, you can always tell who was the service industry individual when they look at the person, the cashier, and the cashier's struggling. It might be a cashier. You see a cashier by itself at some Vons or Sprouts or something like that, and you're and you see them just struggling. And then there's the person that's on their phone. Like, I'm expected. This is expected for you to bag my stuff for me. It's expected. And it's like, you were doing nothing. You could have put your phone in your pocket and helped them bag up the stuff. You could have done that. And I notice whenever I go to the grocery store, I look around and I go, you haven't had it hard yet. You haven't had it hard yet. And then, oh, you have, look at you helping. Good for you. And then you look at the cashier. Like, it was funny. I was in the Sprouts the other day, and I'm cashing out some stuff, and I start helping this individual with the bagging it, like, right away. And then at the end, this guy he looks at me and he goes, actually I have a $10 coupon, and I'm going to put a $10 coupon. And then here's another one for the next time you come here as well. And he didn't have to do that. I noticed he just did that, and it was like, you could tell that he appreciated that there's like, hey, somebody in the world looks out for me too in this world, And so it makes you a better person, bro. It really does, I think, And so and I'm excited to see you grow in this space, because you are one of the best voices that I've talked to, and on these Twitter spaces, in person, and on these interviews, and off stage, on stage here. You have a great voice, and I think your YouTube channel is going to blow up. I really do. I think it's going to be on the up and up. The time and effort that you put into it, because there's a lot of big names out there in the on-chain world, but not too many of them are really breaking it down from a macro view and not just going out there and throwing some crazy plan B number out there. So everybody buys call options for the end of the year. You know, imagine how many call options existed out there because of plan B for the end of 2021. Like how many out there?
Mm-hmm.
How many fell for that?
I don't know. I think it was definitely, there were several hundreds of millions of call options over 200K the last time I looked for December 31st. And you know, some of those people might just be collecting premiums, but I guarantee half of those 400K calls wouldn't exist if Plan B didn't say he thought 450,000 was realistic.
It's wild, man. And so
Not
you
trying
get
to
these,
bag on anyone particular, you know.
well,
No
it's like he was
disrespect.
everyone, sometimes people have this God complex, you know, like I know exactly, people ask me all the time, where's silver going to be right in a year? It's like, I don't know. I just know it's undervalued and they use it in everything. Like it just doesn't make sense for it to be the price. The demand is going to exceed the supply. Like I don't know where platinum is going to go, but I know the demand to just to mine platinum is costing like $900 an ounce right now. So it's like, okay, well you can get it for the cost of it, and also we're not even really exporting very much from South Africa where they get this. You know, so it's like to me it's like I look at palladium, platinum, things that they're actually using, and it cracks me up because everybody talks about, oh, it's gold versus Bitcoin. It's like, does anybody look into the market caps of these industrial precious metals right now? It's like a couple hundred billion for platinum, a couple hundred billion for palladium. You know, it's like these are tiny market caps, but they're 90% of them. Palladium's been in a 6-year deficit. They don't have enough palladium to meet the supply. 6 years running straight, a deficit of palladium. That's why it was worth more than gold. I think it still is worth more than gold right now. But nobody talks about it. It's like, Peter, if you look into the palladium and rhodium and stuff, because rhodium looks pretty dang wild right now. Like, but everyone talks about gold versus Bitcoin. I'm like, these industrial precious metals are not being looked at all. So like for me, I'm actually not a gold bug. I'm more of a silver and platinum palladium bug. I like rhodium as well. But
Interesting.
yeah, I like to look at places of the market that people aren't really looking at, but what I appreciate about you is that you're looking at it more of a macro view. I have never heard you say once, like, it's going to be 100,000 by this exact date, by this exact time. It's going to be at this
Never
level.
will.
And that's why
Yeah.
it's so important to have people like you get the voice that you deserve, because in the audience that you deserve, because I look at, like, for example, Plan B is like over 1 million followers on his Twitter, you know, and it's like, you were
I
completely
think he's
wrong.
almost to 2 now. I think he has like 1.8 million now or something. It's crazy.
I think that you'll be one of the next ones, because people need to follow somebody that actually is preaching real information from a macro view. But speaking on that, when you look at a 5-year horizon, when you look at a 10-year horizon, and your DCA approach of just accumulating Bitcoin right now, like, where do you see Bitcoin? Like, where do you see the money coming from? Do you see it coming from specifically bonds? Do you see it coming from a specific part of the market? What captivates you to get Bitcoin to a certain valuation, and what valuation would you consider it to be? I mean, right now I could see it being, you know, a 6 trillion cap right now, like literally, but it's only a 1 trillion. So, or I believe, yeah, around 1 trillion. Where do you see in, say, a 5-year horizon from now with Bitcoin?
I don't think that the bond market is where we'll see a lot of the money come from. I really think it's in private wealth. You know, that's where, I mean, there's a couple hundred trillion in just private wealth, sovereign wealth funds, high net worth individuals, family offices and things like that. I think that there's a lot of money, a lot of allocation that could be coming from those groups that just isn't there yet. Maybe there's just like a knowledge gap that needs to occur. I know that there's increasing interest. But I think that when I look at Bitcoin, it's $1 trillion asset, but the actual like active market for it is still very small. And I really don't think that it's going to take very much demand to really start moving the needle and getting other people to start paying attention. And I think that there is a unit bias that exists, certainly towards adoption for maybe folks who aren't on the higher end of the income spectrum. But that's not really where most of the money is. Most of the money is in private wealth, and it's privately managed. And I think that if we just started to see 1% and 2% and 3% allocations, we could start seeing tens of trillions flooding into Bitcoin over a few years. So I'm not going to make a price target or put a year out there because I know someone will listen to me and then come back in 3 years and say, hey, you're on Rob's podcast and you said in 2023 it was going to be a $10 trillion market cap.
Almost got him, guys. I almost got him. I
Almost
tried.
got me. Almost got me. But I would say that just to just consider how much wealth allocation actually exists out there towards things right now that have almost no yield. Bonds are one of those things, but there's a lot of money out there that's not just in the bond market that I think is eligible to start flooding in here, and that's where the real impact is probably going to be made and going to be felt.
It's really interesting, and what's interesting about that scenario is it would be very public, where you could, but that, like, because but at the same time, there's something. This is actually something I want to run by you on more of a technical basis. If I was a sovereign fund, let's say I'm a Ramco or something like that, I'm a fund, a wealth fund, someone with a lot of capital out there, I would want to do it discreetly. I wouldn't want people to know that we're accumulating $1 trillion position or a $500 billion position in Bitcoin or something like that. I would do it very discreet and do multiple wallets. What a lot of people don't understand is when you create new UTXOs, that is new, that data, hypothetically speaking, you could get 1,000 Bitcoin into 1,000 separate wallet UTXOs, and no one would know that you own 1,000 Bitcoin. It's actually turned to be, the more I research into the analytics of it, it's like a flex. Like that guy recently, he gave out a Bitcoin, right? I'm sure you noticed on Twitter, there was a guy that like donated a Bitcoin to somebody struggling out there that was like in the mining community. But he like flexed like a 7,000 Bitcoin wallet and peeled one off. And so it was like, I'm starting to realize like how does that skew the data a little bit based on being able to have multiple UTXOs, multiple wallets. And if people watching, a UTXO is like an unspent transaction, which means like the wallet balance in there, where there's 1 Bitcoin in there, half a Bitcoin in there, 100 Bitcoin. Do you see it as a flex almost these days, like to show that kind of a wallet? And if you were a Saudi fund, if you were like a wealth fund or something like that, wouldn't you want to do it discreetly? Because there's only so much available Bitcoin on the supply right now to buy. So you'd want to slowly accumulate and then announce after the fact, kind of like MicroStrategy or something.
Right. Yeah. I think that I would want to do it discreetly. I think that to your first question, what wasn't it? Wasn't it Odell? Wasn't that who tweeted that out? Maybe it was. I'm at Odell. But in regards to the first question, you could absolutely have, 1 Bitcoin in one address spread out over 1,000 addresses with some complex, wallet system. That's absolutely conceivable. And there may be some folks out there who have very strictly managed wallets in that fashion. But one of the things we do at Glassnode, we have some clustering algorithms and some heuristic methods for identifying individuals on chain that own more than one address. And we can do that because we have 12 years of behavioral history to create algorithms from. And so what we can do is identify certain wallet management behaviors, certain types of transactional behaviors that fit profiles. And when those things happen, our algorithms can say, hey, that address looks like it belongs to this address over here that it just sent some coins to. And based on this behavior and what we know about that existing address, we think this one belongs to that person. And then when we do that, we've then joined 2 addresses and we have their combined history, and we assume that all of that history is that one person. And then every new address that they use, if they don't do anything but put a Bitcoin in it and then never touch it, of course it may look like one person. But as soon as they interact with one of the other addresses that has a history, it might get identified by our algorithms, which aren't perfect, but they're learning all the time and they're improving constantly because our data science team at Glassnode are fucking wizards. Excuse my language. But maybe this is a family show, but that's how we identify what we call entities. And so when we have some different data at Glassnode that's called long-term holders and short-term holders. We've got something called illiquid supply and liquid supply, and these are all different ways that we look at the people that hold Bitcoin and how likely they are to hold their coins for a long time. And the way we get those metrics is through these algorithms. It's through this clustering. And so really, I think that if there was a person out there who had a bunch of these addresses, if they put a bunch of Bitcoin in them and didn't touch them for 20 years. It's possible they could get away with just looking like a bunch of people with one Bitcoin. But if they started interacting with them in any kind of identifiable way, the system would pick them up and it would get pulled into our entity metrics and we would learn more about them. So that's the first answer. And then to your point about like a Saudi Aramco or something, this is something I've thought about a lot. I'll first admit that I don't have a super clear answer on what the best method would be because I want to know that myself. You know, we talked to like our buddy Mike Alfred and others who we talk, and James Lavish and those who know more about the institutions, right, and how they work, how big money operates. And I still wonder, like, what would the method be for rolling yourself into a multi-billion-dollar position in Bitcoin now, if you wanted to start now? Because the liquidity in the exchanges is all very segmented. You know, the exchanges as a whole only have about 12% of all the Bitcoin that exists. There's also this other mechanism called OTC desks, which service large customers and large orders, but their liquidity is also really small. And so I think that you'd have to get creative. And there's probably some custodial institutions and private companies out there that have holdings that maybe we don't know about because they would just look like a pseudonymous address on the blockchain, right? Unless they told us that they had holdings. And so I think that there's probably some big whale groups out there and some funds and some pools that can service some of these larger clients. And at first, they may just look like an everyday whale just picking up corn on the chain. And it may be some time before we're able to identify that as a sovereign wealth fund or as Apple or whomever, you know, outside of whatever they may tell us in quarterly filings.
It's fascinating because if they slowly accumulate and then one of these entities, imagine what happened when Tesla bought Bitcoin. I mean, that was, people can say whatever they want, like, oh, he didn't really cause it. No, it was a major catalyst in the 40,000s range. Right? I mean, they picked it up in like 30, I think it was like 33,000. They started picking up Bitcoin, and they announced it, and it just was the major catalyst that just skyrocketed it to like well over 40K right after Tesla announced that. And the other thing about Tesla that's interesting to me, I see Tesla getting into mining, and I see it as almost like it would be. They would be bad risk managers if they were in Texas right now. They're building in Texas. Mining is at the forefront in Texas right now with Bitcoin mining. They are specialists in energy. There's a lot of talk going around renewable energy or whatever, because we both know it's ridiculous that to have a green Bitcoin versus a whatever, that doesn't make any sense. But people want to hear that. It makes them feel better about themselves or something. But but Tesla has all of that. Everything is perfect there, right there to take. They have a ton of capital on the balance sheet to make it happen. They could do a secondary even to get more capital if they wanted, which I would argue they should have done already and done a split after, just like they did the last time. But I've talked with Mike actually about this, with Mike Alfred, and I plan to talk with him more about it. But he agrees. It's like this is it's a risk to not be involved in mining for them right now. But imagine if they announced that. We bought 2 more billion Bitcoin, 2 billion worth more Bitcoin, and then we also are being miners as well on top of that in Texas here. That's what we're going to have, a huge mining facility in our next gigafactory in Texas. It's like, whoa. Like, what would that do? Like, just that one little thing, if Aramco decided to publicly announce, oh yeah, we bought this much Bitcoin, what does that do? What does that do to the supply shock and stuff? Like, what would happen in that scenario where a wild card just comes out of nowhere like that?
Well, I mean, when you look at the spring rally, there was the first break in January over 40K. That was really after we broke the previous all-time high at 19 and a half. We ripped up to 40. The price doubled in a couple of weeks, and then we pulled back. And that was the announcement period. That was when Tesla came out and said, "Oh, hey, by the way, guys, we are buying Bitcoin." And the spring rally then got bookended in May when Elon said, "Oh, yeah, we're not going to take Bitcoin for payment anymore." And so what's really hilarious and also not surprising at all is that Elon himself really bookended the spring rally. He started a bunch of it. I mean, he didn't start it, but he definitely contributed to it in January. And then he helped to create the FUD that led to the mass liquidation 7 days after he announced that they weren't going to take Tesla or Bitcoin as payment anymore. That was May 12th. Liquidation was May 19th. And so he really bookended a lot of the craziness of the spring. So I imagine that if it was him or Tesla that were the ones to come out and say we're going to buy Bitcoin, or our new gigafact, whatever they're calling their factory here outside of Austin, which is where I live, they're building a huge factory out here. If they said, yeah, we're going to start putting miners in there, we've got a bunch of solar panels on the roof, we're getting all this green energy, we're just going to put in a bunch of miners. If they did that, I cannot imagine the retail insanity that would show up here, because it would not, I think it would be very similar to what US equities saw in January and February this year, which is also when Bitcoin was ripping. I mean, tech growth stocks were just going absolutely crazy. Money was just YOLOing in because they thought that it was like a once in a lifetime opportunity, right? And so I think that we'd see something similar, because the liquidity is relatively low, because there's not a lot of coin out there. And if there's just a couple of players with, big B billions that they want to put into Bitcoin, it would move the market significantly in a short period of time.
How much is actually available to buy in Bitcoin right now from these exchanges? Could you talk a little bit about that? Like, if in the scenarios that say somebody comes in and all of a sudden tens of billions of dollars needs to go and get Bitcoin, how much could they even buy that would be available to get to these big buyers?
Well, there isn't that much, and I'm pulling it up here on my other screen while we chat. The last time I looked, and I'll double check the number here, it was about 2.5 million total Bitcoin. That's what it looks like now. Yeah, roughly. And now, so let me preface this by saying that at Glassnode, we track most of the major exchanges. There are a handful of custodians out there that we don't have addresses for yet, like Robinhood. We're about to launch FTX's data. They've been working on that. But all the other big ones we have: Binance, Coinbase, Gemini, Kraken, FTX, or I said FTX is coming, but all those. And their collective sum of Bitcoin is about 2.5 million coins. At its highest point, it was about 3 million, a little over 3 million coins, 3.1 million or so. And that was in March of 2020. The actual
what does that come out to? The dollar amounts, 2.5 million Bitcoin.
Amounts. Let me tell you, I can just flip my chart to USD and it'll tell me here in just a moment. That is about 120 billion.
It's not very much. People might think that's crazy for me to say that's not very much, but 120 billion. I'm actually writing it down just to remind myself to look a little bit deeper into that. But I mean, people don't understand how much money's in bonds and in funds and in the sovereign trusts and stuff like that. I mean, they could easily buy the entire supply like immediately, which is just crazy.
It's worth 120 billion at current spot, and that's 12% of $1 trillion asset. And if someone came in and started trying to buy chunks of Bitcoin at the market, unless they had someone who already owned the corn that was going to transfer it to them as a peer-to-peer transaction. If this was going to take place on any market that exists, the liquidity isn't there, because what I'm telling you, that number, that 120 billion, is across 12.5 exchanges that are all segregated from each other. If you buy, when you're on, that's a major difference of the Bitcoin market from US equities. If you make an account on TD Ameritrade and you want to go place an order, you look on the level 2, you've got a bunch of market makers in there. You got Arca, you got NYSE, you got BATS, you got all these different market makers. And if you place a bid, one of them, any of those houses can fill your order. But when you go to Coinbase and you place an order, you are only trading within Coinbase's liquidity pool. You're not getting orders from Binance. You're not getting orders from Kraken. So their Bitcoin is their Bitcoin, and you're trading with other people on Coinbase that have that Bitcoin. So if you want to buy $120 billion of available corn, you're going to have to go to whatever 18 different exchanges and buy it up separately from each of them and run up the market in each of them. It's just something to consider.
That alone, I mean, is just a total mind-opening thing. You just so it's not even, you can't even just go like, if yes, hypothetically have 120 billion right now, and I go, okay, I'm going to go buy 120 billion worth of Bitcoin. I would have to make an account with Gemini. I'd have to make an account with Coinbase. I'd have to make an account with every single one of these exchanges, and then accumulate however much they were able to give me from each individual exchange.
Right, whichever supply they were able to have relinquished to you, right? Because some of it's going to be with users who aren't going to sell to you. And you know, if I'm looking right now on my chart, so in dollar totals, the top three exchanges have, Coinbase has $34.7 billion of Bitcoin. So it's got about a third. Binance has 25 billion and Gemini has 14. So the most you could get at one place at current spot, assuming no market effects, is about $35 billion, roughly.
And what's so fascinating is the auditing of this. Like, this is how you can see the public ledger in real time is so fascinating, because to audit all of the gold in the world. Like, I've talked to some of the top bullion dealers in the country about this and said, hey, you know, if tomorrow they said there was 20 trillion worth of gold, not 11, 12 trillion, would you be surprised? They're like, no, I have no idea how much gold is out there. And it's like, well, whoa. You're like this is a big deal here. Like, I want to be able to audit in real time exactly how much gold is in each individual vault. I want to know. But with Bitcoin, we can do that. And that's what you just did right now. For all of the viewers watching this, what you just did right now is tell us that, hey, there is only 120 billion worth of Bitcoin even available to buy if they were able to even get it through all of these individual exchanges, if the users would even sell them to these entities. And then they got to hope that the news doesn't drop. So if Tesla decides to do a secondary, and I think they're sitting with around 15 billion on the balance sheet, 20 billion on the balance sheet right now, something like that. If they did another secondary and got another, they could, I don't know why they haven't done that yet with their stock price as high as it is. They should have done another 10 billion scoop. And then just did another split. They did, that was so cunning the way they did that. They did a secondary, scooped up billions for free from the shareholders, and then did a stock split to cover their traces right after. It was like the brilliance behind this right here. Like, Elon Musk really just totally was like, they'll never know. They'll never know. And then like then does a 5-to-1 split. Then the stock like goes 5x more after that. But it's like, it's insane.
Yeah, like it didn't even happen.
It not only did not happen, but he doubled on top of that. And so now he could do another one and then do another 5-to-1 split. I don't know why he hasn't done it already. But hypothetically, I mean, Tesla could accumulate easily. Like, I mean, their market cap right now for their company. I mean, well, Elon Musk owns about 20% of Tesla still. So if he sold his 20%, literally Elon Musk himself could buy the entire float of Bitcoin. One man. That puts it into perspective, because Elon Musk is worth 120 billion at the time of doing this video. He could literally sell his Tesla stock. He owns about 20% of it. If he sold his Tesla stock, he could buy the entire float of available Bitcoin, and there would be zero Bitcoin available after that. Like, Elon, what's going on, bro? You want to fix the world? You got to fix the money first. What are you doing, Elon? Come on.
Pump my bags, Elon. Pump my bags.
Get this moving, man. But I mean, obviously I don't want to say obvious. I mean, maybe he could, but it's just crazy to think that an Elon Musk or a Jeff Bezos, they're not a sovereign fund. They're just one individual. One individual could literally sell their stock, their equity, and buy Bitcoin with it. And there would be no Bitcoin available to buy for anybody for that time period until somebody decided to sell, and then there would be Bitcoin from them. But it's like, you look at that, what would that do to the supply shock on that? I mean, we talk about stagflation a lot and stuff. It's like stagflation is caused by a supply shock, and then everything skyrockets. It's like, there's going to be a supply shock in Bitcoin, whether people like it or not. It's going to happen. And the price of Bitcoin will skyrocket and go through major inflation because of that supply shock in Bitcoin available supply. It's fascinating that that's the first time that I've actually had somebody tell me exactly how much is available from these exchanges to buy.
And look, like if one of these players came in and tried to do what we're hypothesizing here, some supply would come unlocked. Somebody sitting at home with their shit in their cold storage would put it onto Coinbase because they would see Elon buying it up and they'd try to sell, and the price would rip. As soon as they bought 50,000 coins, the price would rip long before they bought, 500,000. But the fact that we know exactly how much liquidity there is and the fact that it is so segmented, it just really, it's like there's all this kindling just laying on the floor, and someone's already poured kerosene all over it. It's just waiting for the demand match to come in and just land on top of it and start the fire. It feels, and just yesterday, exchange balances reached a multi-year low. They haven't been this low since like the beginning of 2018.
That's yeah. I was going to ask you, how much do you see this number fluctuating? So as of right now, you see about 120 billion, 2.5 million available coins on these exchanges. How much does this number fluctuate month to month, day to day, sort of thing? Like, could you go into detail on that a little bit?
How much the balance on the exchanges itself fluctuates?
Yeah, does it go up like 10%, 5%, down 10%, up 20%?
No, it doesn't. It doesn't fluctuate that heavily. It might fluctuate, anywhere from 2 to 10,000 coins a day on a given day. Up or down. A big day would see 20 or 30,000 coins deposited, and you'd be like, "Oh, that's a big deposit." Sometimes there's a 50,000 deposit. And you're like, "Holy shit, that's a big deposit." But generally, it doesn't move quickly. It might move a percentage point or two, but it is pretty fascinating to see. It can move really quickly when there is a demand to exit. So the inflows to exchanges tend to be much more dramatic than and volatile than the outflows. The outflows are, they happen over time, slowly, as people accumulate coins. It's been just kind of a slow, steady downtrend. But the uptrends, where people are putting coins on the exchange, which for anyone listening, we represent, or we interpret in a slightly bearish sense, because by putting the coins on the exchange, you're removing the friction to selling it, to putting it up for sale, right? By taking it off the exchange, you're stating an intent to hold those coins by creating that friction. So when you put the coins on, it's bearish, and the inflows can be very fast. So in May, we saw a really quick influx, and I just off the top of my head, I don't know percentage points, but if I'm looking at it, it looks like in a few days it went from about 2.5 million up to 2.6 million. So like 100,000 coins in a few days. That's a lot, and that was when price was in the 30Ks. So that's a lot of Bitcoin, and that's about as fast as we've seen it increase in the last couple of years. Was that period in May? But since then, downflows, outflows, almost predominantly.
Interesting. And you said that at the peak it was about 3.5 million or 3 million, and then now it keeps going down from that level?
Little over three, yeah, about 3.1 million or so in March of last year, and now we're down to about 2.5 million.
That's
Raw
interesting.
Bitcoin.
So more than 500,000 of that 2.5 of that 3 million has been taken off of exchanges and put into
Yeah.
cold storage.
Since the liquidity crunch in March of last year, when all markets globally had that wrecking day, since that day, exchanges have never come anywhere close to that level of balance in terms of amount of Bitcoin available for sale.
Super interesting data, and I think that that's one of the key ones to watch, is how much is going to be even available and how much is slowly getting chipped away from that 2.5 million coins available in these exchanges. It could go down to 2 million, could go down to 1.5 million. And then at that time, it's like as it continues to get chipped away, that's when that FOMO starts kicking in for people to realize, well, wait a minute, I can't even get in if I want to now. Like I
Right.
can't even own Bitcoin if I want to, if it keeps getting chipped down like this. And then on an institutional level, they're going to be looking at that and just they all play copycat on Wall Street. They don't. There's not really a lot of intelligence these days. They look at like, oh well, Chamath is in this. Well, we're going to go get in it too. Peter Thiel's in it. Okay, we're going to get in it too. They do that kind of thing. And that actually kind of is a segue to the next question I wanted to ask you. I know that that Dan and Venture, the guys I do the Friday weekly spaces with, which I would love to have you as like the fourth co-host there if you ever were interested in that. We'll talk about that off air. But they've been tracking this whale wallet. I'm sure you know about this, the third largest whale wallet. I have my theories on it where I think it's Chamath. I think it's social capital, because Chamath, he hides under the radar how much he owned like 5% of the float at one point, and nobody talks about
Wow.
that he literally owned 5% of Bitcoins out there at one point, like when Bitcoin was like a few hundred, like a couple thousand or something like that, like really, really low. And he's gone on the record to say that he owned 5% of this float. And it's like, well, where did those coins go, Chamath? Where are they? And he is the type of guy to flex like that. Like this specific whale wallet is flexing a lot. Like where it's like, yeah, here's a bit. Okay, now we're trading. Here's a bit. Now we're trading. Like they keep putting it in a Coinbase, and it's almost like they're flexing to the exchange. Like, yeah, it's me. It's me. Look, yeah, it's me. That's how much I got. Check my UTXO, and then they take it back. You notice like that I've been watching the way it trades. Venture was talking to me, and it's like uh, I don't know. It's like there's only a few people that could actually be that wallet, you know? And it's like, I think it's like, is it Elon? Is it Chamath? I think since how long Chamath has been in it, I think it's him from Social Capital. A lot of us were, and this is complete hypothetical, just throwing this out there, but I've been watching this whale wallet. Like, have you seen that third largest whale wallet out there?
I haven't watched it super closely. I read something a couple of months ago that I thought was interesting. It was someone on Reddit who had done a study of the flows on that wallet, and their theory was that it belonged to Robinhood. And the reason they thought so was because they had lined up certain transactions in this wallet with key moments of some kind of financial activity for Robinhood that they had seen on some of their reports. And I was looking for the research yesterday because I wanted to show it to my homies at Glassnode to see if they thought there was validity to it. But I couldn't find it again. It looks like it got taken down or something. But I thought the research, I remember reading it, and I thought it was really compelling because there was a lot of symmetry between some of the timestamps, and it would make sense that a large exchange that we don't have heuristically identified at Glassnode already would own that much Bitcoin, and that we would see frequent activity in and out of it. Because the reason I thought there was credence to that, and I'm not saying I believe it's Robinhood, but the reason I thought maybe there was something to it was because part of me feels that an individual of that level of worth and is likely has a more sophisticated custody solution than the third largest address in Bitcoin's history that they just day trade with or whatever. I just it that I there's something about that like my gut feels like maybe there's an aspect we're not thinking about, and so I don't pay a lot of attention to it. I think it's fun to look at because it kind of demonstrates all the ways we can look at the ledger and the kind of behaviors we can play around with and think about. But I tend not to follow it by itself because I don't want it to affect my perception of what I think markets are doing in the aggregate because it's just one player, right? And they could easily create noise because of how much people pay attention to the wallet because it's the number 3 address, and the other two, the number 1 and number 2, we know belong to Binance, and I forget what the other one is.
We gotta talk off air, and the only reason I mean that because it's like we could actually go into detail on when Robinhood started accepting Bitcoin or started allowing you to buy Bitcoin. There's probably an exact date, and then you could check the exact date of that wallet if the timelines matched up. Have you done that yet? Where you kind of can
I haven't, no.
like
No,
that would
I
be
was trying to
fascinating.
find that research because that guy, whoever this person was, they did it. It was really extensive, and it's unfortunate now that I'm referencing it and I don't have it here to look at because it was just a couple months ago I saw it. But yeah, they seemed convinced, and I thought it was at least enough to be interesting.
Yeah, it's because that's what makes that's what I why I thought it was Chamath because whoever is doing is flexing that they have balls. You know, they're flexing. You know, because it's like that's an off chain wallet with how much Bitcoin in it again isn't there? Is
I'll go look it up. It's got to be a couple 100,000.
when he said a couple 100,000, he's not talking dollars. He's talking Bitcoin. Like so,
Bitcoin
multiply that by 50 G's.
number
So
3 address has 118,000 Bitcoin, which currently is 5.9 billion.
five, and that lines up with Chamath. I'm telling you, like he's got that kind of capital because he was in Bitcoin so early, and he was in so early that he would have been testing out cold storage and stuff. So it's like, to me, I just don't know. Like, does Robinhood have the balls to have that kind of a cold storage? I don't know.
Well, the first transaction on this address was February 5th of 2019. That's the first in on this address, courtesy of bitinfocharts.com. They have a list of all the top addresses. That's where I'm getting this information. Bitinfocharts. And so their number 3 address, it says the first in was February of 2019. And that doesn't mean that's when the user first bought Bitcoin. That's just when the address appeared. So I'm not sure. I'm not sure what dates that might line up with.
Now, see
Fascinating.
this exact scenario, which is so cool that it happened during the podcast, is this exact scenario is why on-chain is so cool to watch. That you can actually study a specific wallet and going, geez, this wallet with 118,000 Bitcoin just sent this much to the exchange, and wait, it just bought this much Bitcoin right now, just added this much Bitcoin, and they're advanced traders. Obviously, whoever's this wallet is a very advanced, very good trader who keeps nailing it. They keep, like, literally when they buy, when they sell, like they're nailing the trades, and so they're a very fun one to watch. And it's just crazy how they keep it in one UTXO like that. Like that's such a gnarly flex. Like I would at least want to divide it between a few UTXOs or something. But
See, that part of the reason I thought maybe it was an exchange was because I've noticed, and I haven't done extensive study on it, so I'm not going to pretend like I've researched it in depth, but I do know that flows, like you said, Rob, there's flows that line up with like great market timing. And so I almost think like, what if this exchange is actually, what if this address, excuse me, is actually the coins that are owned by a bunch of people? And if you think about the timing of the flows, think of them almost in reverse. It's acquiring a bunch of coins at the lows because people are selling and they're putting them onto the exchange. And then at the top, people are taking their, people who have gotten in or maybe taking their coins out that are, I don't know. I mean, like, I know that there's some holes in the theory I'm proposing here, but I think that the timing of the flows that take place in the aggregate on exchanges could explain why this one address seems to have ins and outs, like when the market is at its highest and lowest points. That's when exchanges have the most activity. Just something I thought about, but Venture and Dan have looked at it a lot, and I know that they've heard me say that I don't necessarily know that it belongs to a person, but they seem pretty convinced. So they could see things that I haven't seen yet. So I don't know. It's worth considering.
yeah, we went so far as much as we've talked about it. Like I remember when Dan was talking about it. I think I brought that up to him where I'm like, that could be Chamath, man. Like he's been in for he is the kind of guy that could flex 5 point something billion. He could do that, but it's like it really is. It's exciting to see that there is some like it's exciting to watch that wallet and see what's going on with it, and then like I'm to go back to Robinhood though. And you're the first person that told me it could be Robinhood, and the reason why that has a lot of grounds to it too is they don't allow you to withdraw your Bitcoin, right? I think they said that they're going to in the future or something like that, but as of right now, they keep saying soon. They keep saying that, but they're not allowing people to take their Bitcoin off of their exchange. So with Cash App, that's why I knew it was so big to take my Bitcoin off of Cash App, because they limited it. When someone tells me like, oh, Rob, you can't have the cookies in the cookie jar, when I was like 8 or something, when I was a little kid, I'd be like, oh, you just wait. I'm not only going to take the cookies, I'm going to break it on the floor and show you that I broke the jar to take the cookies. That's how I'm going to do it. And then you're going to come home and you're going to see that I broke the jar. I'm not even going to do it discreetly. You told me I can't have cookies. I'm going to break the jar. I'm going to take the cookies and I'm going to do that. And so it's like when I saw Cash App not allowing me to, with like it was only allowing me to do 2,000 a day, 5,000 a week, and I keep maxing that out every chance I get. It's like I was like, well, why are you limiting? Why are you limiting us? What is that all about? Because they want to keep as much there because they're probably leveraging and doing stuff behind the scenes with the Bitcoin. Yeah. So like that's
and they
the
could
other
have multiple
aspect.
Addresses, because we don't know how much coin that Robinhood has, and exchanges don't use just one address. And so whether it's Robinhood or not, all the exchanges have multiple addresses that they move their coins around. They all have different methods. So who knows? But you're right, though. They don't let you take out.
But yeah, and so that kind of what scares me is that almost invalidates though, because if they're not allowing you to take it out, then it almost invalidates the entire thesis of Robinhood, because then what are they doing?
Assuming that's their one address, assuming that they're not moving things around between their own wallets, for whatever purposes. Maybe one wallet is where they keep their own cold storage, and maybe they have a hot wallet where they do rehypothecation of people's coins for whatever, shitty purposes. That's possible. Because, Binance has more than one address. FTX has more than one address. Binance has the biggest address, but that's not their only operating address. So not to pour water on what you're proposing, because I think that these are all holes that deserve to be poked in this theory. But I think the fact that we don't know a lot about Robinhood is what makes it hard to just say, yeah, it's not them, because they're not very transparent about their holdings like these other exchanges are.
And that just goes to show you, all the people listening to this, don't use Robinhood. Don't use Robinhood. This Vlad guy is sketch as can be. Watch him in interviews. This guy is like the most sketchy dude. I don't like him at all. I don't care how many times his publicist or whatever, there his PR team gets him to try to change himself into a nicer guy or whatever. It's like, no, they only allowed you to sell your GameStop and made it like crumble on people. And they're doing all these things behind the scenes. If they give you free trades, there is a cost to that. And the cost to that is that they're not allowing you to take it off their exchange. And so that to me is just such a flaw. I mean, the entire utility of Bitcoin is to be able to be your own bank. In that scenario, Robinhood is the bank. You're not your own bank. You just own Bitcoin and you're trusting that Robinhood is solvent. And a lot of people, I remember in 2007 when I remember like, I feel like when it was either I think it was my dad or somebody close to me, my uncle or something, was trying to call in to sell stock, and there wasn't somebody to pick up the phone in 2008 and 2009 and all that. The phone lines weren't working to sell your stock. Wow. And so it was like, okay, well, when there's
how do you get out?
Imagine like there's been times when TD Ameritrade's app goes down, or Robinhood's app. And so I think of it as this like funnel mechanism of like, okay, well, if I trusted Robinhood with my Bitcoin, I'm at the top of this funnel mechanism and I'm trusting that they own the Bitcoin. I'm trusting that they actually have the Bitcoin in the first place. And so I gave them, and I trust that they have the actual Bitcoin. I don't know, I can't verify it, but I'm trusting them that they have my Bitcoin. Then if I want to get that Bitcoin, they don't allow me to take it off of their exchange and actually accept and take it into my own cold storage. They say they might in the future, but as of right now, they don't. And so in that scenario, say I want to sell my Bitcoin. Well, I can't take ownership of it, so I can't leverage that Bitcoin. They're not allowing me to leverage it to be able to not declare a capital gain, which is the main utility of Bitcoin, is if you need to get fiat, you can leverage it to get the fiat in. And that's when I talked with the guy from Ledin recently, Mario, and he talked to me about these Bitcoin-backed loans, and that sector is a whole other thing to talk about. But if you have that scenario, you have this funnel, and so you go, okay, well, I can't accept the utility of the Bitcoin. I can't own my own Bitcoin, so I might as well sell it. So if you sell the Bitcoin, then you got to hope that they actually have the Bitcoin and it's solvent enough to sell it. Then you're going to have to hope that they're going to be able to send that. They're going to be solvent in dollars to send the dollars to your bank, and then you have to trust that the bank is solvent to give you the money that you just got the Bitcoin from. That their the Fed wire system that only operates on one node. When you have Bitcoin like thousands and thousands of nodes, you have one node. And you have to hope that node works, and that node's gone down already in the past. So you got to hope that node works to do a wire transfer from Robinhood into your bank, and then you got to hope that the bank is solvent enough to give you the money, and it doesn't close their doors. And then on top of that, you got to hope that the money itself is solvent, which is like, holy crap! Like, why would I ever want that at all? Like, it's just crazy to me. It doesn't make any sense. So yeah, when you pay a fiat Coinbase, or you pay a fiat Cash App, or you pay a fiat at an exchange at Gemini or whatever, it's worth it because you get to actually own the Bitcoin. And you can take it off and put it in an exchange. Like, it is so worth it. And so it's just there has to be, though, like, where would Robinhood store this money if they did? Are they buying GBTC with it? Like, are they like what are they doing to prove that they actually own this Bitcoin? Like, if you can't track the wallet and we don't know where the wallet is, how do we even verify and audit Robinhood?
Well, and that's the tough thing right now, is that, if an entity is not forthright about which addresses they have, or if we don't have some other known entity that we can connect like a transaction to then identify their addresses, we have to trust them, and we have to look at quarterly filings, which, may carry their own fluff. And right now, that's all we have to go on with Robinhood. Right now is because we don't know any of their addresses. I was asking the team, my data science guys, this recently when at a meeting. I was like, is there any way we could see Robinhood if I asked you guys to make me a chart of that? And they were like, well, we can't, because there's a lot of, that is part of the growth of on-chain now, is trying to figure out best practices for identifying public entities on chain, right? And because we're kind of at the behest of their disclosures in a way. Or, you could maybe set up a bot that runs transactions on each exchange and then just follow that bot on the block explorer and then see which addresses it goes to and be like, oh, that's Binance because we did that trade on Binance. Oh, that's FTX. We did that trade on FTX. You could do things like that. But other than that, you kind of just have to rely on crowdsourcing. And I think there's some other groups that try to collect addresses of known entities. And so some of that is, you have to trust a little bit of that data, which is Not ideal, but it's just, I think that over the next couple of years, maybe some of our practices there will get better. But yeah, it's hard to trust it right now in some cases, especially with people like Robinhood that we don't know enough about.
That to me, I'm so excited to talk about with you in the future when you and the team at Glassnode look into that, because that is something to be exposed. Like that is like the coolest expose that you could do right now, is proving, how, because has Robinhood even commented to the amount of billions in Bitcoin that is owned in their exchange, that people have bought within their exchange? Like they're allowing you to buy Dogecoin, they're allowing you to buy all of this stuff, and it's like, do they even prove that they own it? If you can't own it yourself, they're not allowing you to withdraw it. Can they even prove
Right.
that they own it? Like it's just crazy to me.
I think I saw one of their filings from this year that they had about 20 or 21 million dollars worth of or yes, 21 million. I can't remember what they said. 21 billion, maybe it was. They had some amount of coin, but they didn't say what the split up was, because they have Sheeb, they have Doge, they have Bitcoin, they have Ethereum, they have Bitcoin Cash. And their filing just listed their holdings as a total sum of all tokens. And I think they gave the dollar amount, and I think it was like 20 billion or something like that. But then they said Doge accounts for a third of our activity. And so then you can make inferences. Okay, well, if Doge is a third of 20 million, then maybe at most Bitcoin is a third of the rest of it, because they've got like 6 or 7 tokens. And so then my loose napkin math tells me that maybe they've got $7 or $8 billion worth of coin, which is, what's the math that we did? Maybe that's like 130, 140,000 Bitcoin, which would put them in high on the list of exchanges. It would put them in probably the top 5 of exchanges in terms of size. And so I'm very curious to see their holdings for sure.
Yeah, definitely. And but that also goes into detail on just how insane it is that we can audit Bitcoin like this. Like you just can't, like you can't hide it. There's no hiding. They have to eventually show their cards, and then those cards they can figure out, where it came from, and you can go into the trail of that wallet in a way. So it's like, although the wallets are anonymous, and this also proves to the people watching that go like, well, it's not anonymous. It's like, no, obviously they're anonymous because we don't know who this third largest whale wallet is. I would love to know if we, who are actively studying this and actively trying to find out who this whale wallet is, and we don't know who it is, and we're making theories about it. Obviously, there's an anonymous nature to Bitcoin, and now eventually somebody can expose their cards by sending it to an exchange. Now that exchange knows something about it because maybe they sold it through the exchange, and then that exchange knows, but then that's between them and the exchange. But if it's held in a wallet in a UTXO, it's just a UTXO. It's just a number. Nobody knows who's that number, and so this whole space is fascinating to me, especially that auditing mechanism of it. And then it's also like, if we do find out where Robinhood is storing this Bitcoin, which wallet is Robinhood, they can't hide. They can't pretend that they own only this much Bitcoin. They can't say that they have to prove it to everybody on a public ledger that's verified by all the nodes around the world that have verified these transactions. They have to
I've
prove.
got one right here.
Same here. I got 2 now. I got the Umbrella and the My Node. I actually am starting to like the Umbrella one a little bit better. But it's to me, it's fair checks and balances. For once, we have fair checks and balances where you cannot get away with this flat guy over at Robinhood cannot get away with saying we have 10 billion in Bitcoin, but really they only have 1 billion in Bitcoin, and they're just running a Ponzi. It's like that to me is huge, and it proves that this could be a brilliant reserve asset in the world. It's just the auditing of it. I've taken up a lot of your time, and I appreciate how much time you spend with us, man. And everybody watching this, make sure to go to the description and check out Tex's channel, AlphaBeta Soup, because he goes into detail on his charting and his theories and all these things about Bitcoin. And if you haven't learned from this interview, he's a very humble guy, and he puts a lot of research and a lot of effort into the macro view thesis that he has on Bitcoin. Highly recommend doing that. But I wanted to wrap up with this question, and obviously I'm excited to have you on. Maybe we could talk about this Robinhood scenario after we put some brain power on it, and you can comment on it in the future a little bit more. But why only Bitcoin for you? Like, what is it about Bitcoin? If you could talk about the security of the network or, the community, what is it about Bitcoin specifically that you go, I'm not buying SHIB, I'm not buying Doge, I'm not buying Ethereum. I only own Bitcoin verified by my own node in my own cold storage. I'm in BTC, not BSV, not Bitcoin Cash. We personally think that that's a scam, just our opinions. But what made you go, I'm a Bitcoiner and that's it? BTC.
I think, we've definitely touched on some of this throughout our chat today. And, something that makes it difficult for me to be compelled to invest my money in any of these other coins for any like real length of time. I'll fully disclose that I sometimes swing trade some of these altcoins, but I'm not super successful at it, which is part of the reason why I don't think it's a great idea. And I converted all ultimately to Bitcoin because that's where I want my wealth to sit. And the reason it's hard for me to talk about any other coins or ever suggest people put their capital into them is because I just I don't necessarily trust the human component of these projects. Humans have demonstrated throughout history that when the closer they are to the production of wealth, the more likely they are to be corrupted by it. And the thing that gives me such hope and confidence in Bitcoin is the fact that it is run by consensus. The fact that there is no one person who is important in Bitcoin. None of us matter, right? Bitcoin doesn't even really matter, but it's the fact that it has no central control, that it has no corruptibility, that it has no borders, that it could never be censored. Those characteristics, that mix of characteristics, isn't true for those other projects. And many of those other projects are trying to be money, which I think is a completely fraudulent position to take and to present oneself as. And so, in this world of high risk everything, something that is incorruptible and is an immutable truth held up by consensus by millions of participants is something that I can put faith in into the future, that I don't have to check on it every day and worry that I'm going to see some news about some corrupt board member doing insider trading, or have to worry about some threat to future free cash flows or anything like that, because Bitcoin is what it was 10 years ago today and what it will be 100 years from now when they're still issuing coin every 10 minutes. So that is why I choose Bitcoin and nothing else.
That's a great answer. Yeah, people tend to forget that this is something that is wildly decentralized, where these other altcoins are not decentralized. They're very centralized. If you bought SHIB, we just went through with Robinhood. That is if you own Shiba Inu or whatever on Robinhood, do you really think you're decentralized? Do you really think you have any kind of sovereignty? No, you have nothing. You have a random coin that was developed by people that wanted to pump their bags, and then they allow you to buy this random token within a centralized exchange that doesn't allow you to take custody of it. That's clear centralization.
And there's some VC sitting somewhere with 50 trillion SHIB in his wallet because he was one of the first guys.
Exactly. And I look at Bitcoin and I go, well, like if an entire superpower country outlawing it didn't stop the hash rate and didn't stop the network, what can stop it? China literally outlawed it, and it turned around and the hash rate dropped, and then it just bounced right back. And if you tell me that wasn't a strong attack on the network, like, how could you get a stronger attack? It's like that's as strong as it gets, as a superpower outlawing you. Not only a superpower, but a communist superpower that would literally, do some very rough things to you if they found you with it. It's like, okay, well, and so the outlaw all, and not only that, but that was the premier mining location. So the premier mining location that was communist, that decided that to outlaw it throughout the entire country, that didn't stop it. The miners just, all that happened is that the humans went, no, we're going to keep the network going, and then we're going to move it over here. And they moved it over to the U.S. And so it's like, okay. And then if the U.S. banned it, it'd go over to Europe. And if Europe banned it, it'd go over to Switzerland or something, or go over to wherever. It's like it would go to Iceland. Who knows where it would go.
It's whack-a-mole. There's no way to stop it. If you try to suppress it, it will just pop up somewhere else.
And what I can't wait for, and this is something that got me also very big on Bitcoin myself, is you, in a sense, get a multi-billion-dollar legal team every time you get into Bitcoin, because if someone attacks Bitcoin, whose legal team is going to be going after them? MicroStrategy, Grayscale, ARK Invest, Tesla. All of these individuals have excessive legal teams, multi-billion-dollar legal teams. Do you think that they would just accept that someone that has their entire balance sheet on Bitcoin, they're just going to allow it to get attacked like that? No, there's going to be a huge lawsuit, and they're going to win that lawsuit because it's defined in a certain way where even the SEC is going to call it a digital gold. They're going to call it an asset. It's not going to be labeled as a security. So it's that to me is huge as well. In addition to everything that you just said there.
That's an amazing point, Rob, about the legal team, because of the incentive system and because of the way the incentives are structured, the game theoretical nature of Bitcoin is that everyone invested in Bitcoin has an equal incentive to maintain the integrity of the network, right? Because it benefits all holders equally. And so every person who holds Bitcoin, every corporate entity, high net worth individual, or McDonald's worker is equally incentivized to protect Bitcoin. And so and because none of them can control it, right? That's where the incentive comes from, is to uphold the rules-based system that we've all agreed to participate in. And that's really where its strength comes from.
It's just it's awesome, man. And I thank you so much for sharing all of your knowledge with the audience here, guys. Where can they find you, Tex? Where are the places they can find you here online?
So follow me on Twitter at TXMC Trades. I post constant analysis and observations. I do spaces with your boy Rob here and all of our friends in the Bitcoin community, and on Bitcoin Twitter, I should say. And also, you can follow me on YouTube. My channel is called AlphaBeta Soup with TXMC. You can also just go to my Twitter page and click in my bio. And like Rob said, I post videos about twice a week. I don't have a schedule, but it's about twice a week until I can quit my fiat job and make a real schedule. And we post a lot of on-chain stuff, cool charts, and just trying to learn about Bitcoin together. I've been really amazed at the response that I've gotten. I'm humbled and grateful that you invited me on your show, and I really appreciate all the kind things you've said about the content I've been putting out. I never expected to get such an amazing positive response, and Bitcoiners really seem to appreciate the things that I'm putting out, and so I'm very motivated to continue doing it, and it's really all that I want to spend my time on. So thank you.
It's because you're real. You're real, and you put out information that you truly believe in from your heart. It's not filler content or something like when sometimes people buy a CD or an album or something, and there's all this filler music, and there's only 2 good songs on it or something, and it's like you really put information out there that is worth watching and worth looking into. Since we're wrapping up here, I'm going to put all those links in the description down there below. So make sure you check those out. I highly recommend it. Really, really great work. Tex, thank you so much for coming on here, man. I really appreciate it.
Thanks, bud. I'd be happy to talk anytime. Just let me know.
Really looking forward to future chats, man. All right.
Yeah. Are you going to be in Miami? If so, then we're totally going to bro hug.
Oh, for sure. For sure. I mean, I haven't been traveling at all, man. I've just been staying locked up in my office for the longest time, but I got to eventually start getting out there to at least conferences and seeing other humans out there in the world would be probably a good thing, but yeah, I probably will go.
Cool, man.
Let's talk soon. All right, well, I will see you guys all later. If you haven't subscribed to the channel, please do click that subscribe down there. And if you'd like to like the video, would really appreciate you hitting that like button and getting this out to more people. See you at the next video. Signing out.